Click the bell icon to get latest videos from Ekeeda.
Hello friends, we will do now one question of working capital where examiner has given the details of cost in a bit difficult way. How to find out the values? Let us understand. From the following figures, prepare an estimate of working capital. Production 30,000 units. Selling price per unit rupees 10. Raw material 60% of selling price. Direct wages 1/6 of raw material. Overheads twice the direct wages. Material in hand 2 months requirement. Production time 1 month. This information is relevant for calculation of work in progress. Finished goods in stores 3 months. Credit for material 2 months. Credit allowed to customers 3 months. Average cash balance 40,000. Wages and overheads are paid in the beginning of next month. This is information relevant for calculation of creditors for expenses. In production, all material are charged at initial stage, that is 100% material, and wages and overheads accrue evenly. This information is relevant for calculation of work in progress. Production units are given 30,000 units. This is for full year. We are required to calculate production units on monthly basis because all other information is given on monthly basis. Production units are given 30,000. For per month calculation, we have to divide by 12. So it comes to 2,500 units per month. We are required to calculate per month cost. Selling price per unit is given rupees 10. Information of raw material is given in percentage form, that is 60% of selling price. Selling price per unit, raw material is 60%. So 10 rupees multiplied by 60%, it comes to 6 rupees. Direct wages 1/6 of raw material. So raw material 6 rupees. Direct wages 1/6 of raw material. So it will be 1 rupee. Overheads twice the direct wages. Direct wages 1 rupee. Double twice. So it will be 2 rupees. So thus we got the information of material, wages and overheads. In this question, this was an important point to calculate these values correctly. Total cost 9 rupees. Sales 10, 10 minus 9, profit is 1 rupee. We are calculating per month cost, so we'll multiply all these values with per month output production units 2500. So we got per month cost raw material 15,000, direct wages 2,500, overheads 5,000, total cost 22,500, profit 2,500 and sales 25,000. Material in hand 2 months requirement. Raw material per month multiplied by period. Raw material per month 15,000. Average stock of raw material 2 months, so multiplied by 2. So it is 30,000. This will be treated as current asset. Finished goods in stores 3 months. Total cost per month multiplied by period. Total cost per month 22,500. $22,500 multiplied by 3, 67,500. This will be treated as current asset. Production time 1 month. That is information of work in progress stock. Raw material per month 15,000, direct wages 2,500, overheads 5,000. While calculating work in progress, raw material will be taken at full value. Raw material per month 15,000. Work in progress period is 1 month, so multiplied by 1, it is 15,000. Direct wages per month multiplied by period, it will be taken half, multiplied by 50%. So it is 1250. Overheads per month multiplied by period multiplied by 50%. 5,000 multiplied by 1 month multiplied by 50%. 2,500. We'll add now these three values to get work in progress stock. 18,750. This will be part of current asset. Credit allowed to customers 3 months. Sales per month multiplied by period. Per month sales 25,000. multiplied by period 3 months. So debtors 75,000. Debtors 75,000 is a current asset. Credit for materials 2 months. This is information for current liabilities. Raw materials per month 15,000. Creditors for goods raw material per month 15,000 multiplied by period 2 months. So it will be 30,000. This will be treated as current liability. Wages and overheads are paid in the beginning of next month. So 1 month arrear. Wages per month 2,500. Overheads per month 5,000. Overheads per month 5,000 multiplied by period 1 month. Wages per month 2,500. Period 1 month 2,500 multiplied by 1 2,500. It will be part of current liability. Overheads per month 5,000. Period 1 month. So it is 5,000. This will be treated as current liability. We have calculated required amount of current asset and current liabilities. Let us prepare now statement of net working capital. It will start with current assets. First, inventories. We have three types of inventories: stock of raw material, stock of work in progress, stock of finished goods. We have already calculated the values while preparing working notes. Stock of materials 30,000, stock of finished goods 67,500, stock of work in progress 18,750. Next we have debtors at sale price. Debtors 75,000. Average cash balance 40,000. less current liabilities. We have already calculated creditor for goods 2 months 30,000. Creditors for expenses wages 2,500, overheads 5,000. Total of all current assets is 2,31,250, that is gross working capital or total current assets. Total current liabilities 37,500. From total current asset, we will deduct total current liabilities to arrive at net working capital. One lakh 93,750. So we got net working capital 1,93,750. In this question, we are required to focus particularly on information of elements of direct material, direct labor and overheads. We are required to correctly value them, otherwise the whole calculation will go wrong. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.